Welcome to Morning Brief, presented by Robinhood, the home to commission-free trading. I'm Julie Hyman. Let's get to the three things you need to know today. First up, Oracle shares are sinking and reigniting concerns over the AI trade. Investors were disappointed by the company's cloud sales and an increase in data center spending. Oracle has also taken out significant sums of debt and committed to leasing multiple data center sites, but its massive spending isn't yet translating into revenue, at least not as quickly as Oracle had promised. The database software provider now expects to spend $50 billion for the fiscal year. That is a $15 billion increase from its September forecast. And the other big focus for investors, of course, is the Federal Reserve. The central bank issued its third consecutive rate cut this year and kept its outlook for an additional interest rate reduction next year. But there's a big question as to when that cut would come. Two Fed officials formally dissented against the cut. A third governor dissented in favor of a larger reduction. But the Fed's quarterly dot plot highlighted a so-called silent dissent within the Fed. 6 officials who didn't vote this time still forecast rates for 2025 higher than where the Fed has cut to its benchmark rate to, implying they would not have acted at this meeting. Investors are still making sense of both Oracle and the Fed. Stocks rallied following the rate cut, closing within points of a record high. But Oracle's results brought that rally to an abrupt halt. The sentiment reversal highlights how AI bubble fears continue to weigh on investors' minds. In recent weeks, rate cut bets helped reignite the bull market, but now investors are left to balance both AI and policy uncertainty going into 2026. Let's get a check-in on stock futures here. So we are seeing Dow futures indicate a little tiny extension of the gain that we saw yesterday in reaction to the Federal Reserve cut. Really little change, though. The S&P 500 and the NASDAQ 100 futures, however, are indicating a lower open. They're obviously being weighed down more by Oracle here and sort of that tech ripple effect. So we'll continue to keep an eye on that. Let's dig into our top stories of the day now. And joining me now for that, Federal Reserve correspondent Jennifer Schonberger and Marvin Lowe, State Street senior global macro strategist. Jennifer, I want to start with you and your take on yesterday's meeting now that we've had some time to process it and digest it, right? And you had talked about in advance that there were no more insurance cuts, right? That we had seen the end of that. And yesterday did seem to sort of confirm that.
Yeah, I think the insurance cuts are over at this point, Julie. Chair Powell and the committee clearly seem to indicate that they are poised to take a pause in the new year. The question is, how long is that pause going to be? And I think key to that, underscoring that, is that they added back language into their statement, language that had been used previously in last December, ahead of when they took a very long pause until September, when they resumed the 3 rate cuts that we saw just this past fall. So that is telling right there in and of itself. Also, you talked about division amongst the committee, the fact that we saw 6 silent dissents. We saw 2 voting members dissent, Chicago Fed President Austin Goolsbee and Kansas City Fed President Jeff Schmid. And that speaks to a higher bar for cuts next year. And so no matter who the next Fed chair is going to be, I think that is going to limit Fed cuts in and of itself over the next year.
Marvin, I want to turn to you on this. What was your take on those dissents within the Fed and what this all implies for where policy is going to go from here?
Yeah, I mean, I think it speaks to a lot of what the economists and the analysts in the financial markets are dealing with at the same time. You've got data that is saying a lot of different things, and you've got an economy that's reacting in ways that it typically doesn't. What it says to me is that the bar is higher. Jennifer is absolutely correct. But you also have a Fed that has pretty much shown us that if things get bad, they will act. And I think that that is something that will give investors a little bit of comfort in that they're still calling for a cut. It's just a function of what it would take for that cut to get there. I think that we could feel somewhat comfortable with the fact that they're having those deep conversations. If the economy is saying that we don't need a cut, then the Fed's going to wait and really parse through the data before they get to that point, rather than just willy-nilly cutting and then at the risk of sparking inflation.
Well, and let's talk about, Jen, let's dig into the risks on either side here. I thought it was really interesting that Powell talked about maybe an overcount in the labor market, for example. But he also seemed to indicate that the upside risks to inflation maybe are limited at this point.
Yes, exactly. So that's the interesting take here, because he thinks that job growth has been overstated by 60,000 per month. So he says that we've probably seen negative job growth of 20,000 per month. And that kind of makes you think, well, hey, how come you haven't been cutting more aggressively based on that? Though they seem to think a lot of that is more structural oriented, with lower participation rates because of lower immigration. And like you mentioned, he doesn't seem too concerned about inflation at this point. He thinks that the major driving factor here is tariff inflation. So on the goods side, not the services side, which I thought was pretty interesting, because I thought services inflation has been a little bit hotter over the past couple of months or so. And he seemed to indicate that unless we get any new tariff announcements, we could see tariff inflation peak in the first quarter. So for the Fed to cut going forward, either you have a recession, that doesn't look like it's in the cards. You see a massive deterioration in job growth. We'll see what happens there. We could actually see that rebound given the dynamics that we may see in the economy next year. Or you see inflation markedly coming down. And maybe that is the thing that the Fed needs to see. But that's probably not going to happen until the second half of next year.
Marvin, I'm curious your take on that balance of risks and what you're more concerned about, whether it be price stability or the job market.
Yeah, I am definitely leaning on the price stability aspect of it right now, just because they are talking about cuts. They have put 3 cuts into the economy, and I'm not convinced that we're going to see the degree of disinflation that the chairman and to a certain degree the economic projections are calling for. So some of the data that we look at in terms of online prices is showing that we're still in the midst of what could be increasing prices from the good side of things going to the beginning of next year, but also that services part, which has proven much stickier. Kind of having said that, there are absolutely concerns with the jobs market, but spending is holding up. Their economic projections around growth were pretty strong. There was a pretty good markup to their GDP estimates. So you kind of balance all of that, and it does give you both sides of the trade, if you will, which is kind of the volatility that we're probably going to deal with. But inflation is definitely higher on my list than what it seems the FOMC is signaling.
Marvin, I want to ask you about the AI part of what we're seeing play out this morning as well. As we talked about, Oracle coming out, promising big spending, but unlike some of the other AI giants, it doesn't have the war chest that they have. And that seems to be what the market's reacting to. But from a sort of macro point of view, how are you thinking about the AI trade? I mean, there's all this talk about a bubble, and how it would affect mostly individual companies. Right. But how are you thinking about that from an economic perspective and whether it is a risk?
Yeah, I mean, the equity markets are important from a global economy, obviously. It adds wealth, it adds confidence, and if we have a serious erosion in that confidence, it's going to be something that will impact what you are modeling in for your growth forecast, if you will. So that's always a concern. I do think that the amount of capital spend that we're talking about with these hyperscalers is quite impressive and to a certain degree a little bit awe-inspiring that the market could absorb that much amount of capital. That in and of itself has created a lot of the spending that has proven a tailwind. So I look at it from the perspective of financial stability, what's happening to valuations. Are we going to continue to get that spending influencing the economy and the growth, but also the productivity aspect of it, which is so important in a lot of what the Fed is, I think, expecting over the course of the next couple of years. If it doesn't prove as accretive to the economy, that productivity is not going to be there.
Yeah, and to that point, Jen, I know that in the past, Powell has addressed AI, particularly AI and jobs, but I don't think he addressed that yesterday, correct?
No, he did address it, actually.
Okay.
He thinks that in terms of the impact, he talked about it in terms of the impact on the economy as well as the impact on the job market. He thinks it's too early to say that AI is boosting productivity at this point, though he is surprised. He didn't think he would see productivity around 2% over the past couple of years. And so and he thinks that it could pick up thanks to AI. So that is a driving factor in the Fed's economic outlook and why they raised their GDP forecast to 2.3% for next year. As for the jobs market, they think it may be impacting the job market on the margins, but it's not a major driving factor at this point. And certainly as we've gone through the pandemic, we have seen companies use technologies to create more efficiency. So AI is sort of going to be that next step, I think, in this process. And we'll see how this is going to play out over the next years.
Right, exactly. But as Powell said, as Marvin said, it's still a little early, right, to try and figure all this out, but definitely watch this space. Jennifer, Marvin, thank you so much. Appreciate it. I'm going to bring you some breaking news right now. Disney going to make $1 billion equity investment in OpenAI. That investment part of a deal to license its content on OpenAI's Sora video generation app. The two companies reached an agreement for Disney to become the first major content licensing partner on Sora. Its 3-year licensing pact covered animated, masked, and creature characters, plus costumes, props, vehicles, and environments. However, there will be no talent likenesses or voices included. Disney now becomes a major OpenAI customer and will use APIs to build products and deploy ChatGPT for employees. In addition to the investment, Disney will receive warrants to buy additional OpenAI equity. We'll bring you more details as they cross, but undoubtedly, this will spark more debate in a Hollywood that is already feeling under pressure because of the bidding war for Warner Brothers, potentially, and whether Netflix or Paramount wins, and also just the increasing use of AI generally and the threat that it potentially poses to the creative class in Hollywood. So this is a very interesting agreement, and we'll see if the other studios potentially follow suit. Not seeing much reaction, interestingly, in the Disney shares, unlike some of the other earlier OpenAI deals that we have seen struck, where we saw definite upside in the companies partnering with OpenAI. But indeed, we'll watch for more developments and bring them to you. Up next, trending tickers, and we'll get you to the opening bell. Welcome back to Morning Brief, presented by Robinhood. Now time for some of today's trending tickers. We are watching Eli Lilly, Coca-Cola, and Gemini Space Station. First up, Eli Lilly. The drug maker said its next-generation obesity drug delivered what appears to be the highest weight loss yet in a late-stage trial, while also reducing knee arthritis pain. That clears the first of several upcoming studies on the weekly injection. Lilly says the highest dose of the drug helped patients with obesity and a type of knee arthritis lose an average of nearly 24% of their body weight at 68 weeks. In fact, the company said some patients lost so much weight they decided to drop out of the trial. The drug is next in line after Eli Lilly's weight loss injection Zepbound, but it's unclear when it could enter the market. Next is Coca-Cola. The beverage giant has named current Executive Vice President and Chief Operating Officer Henrique Braun as its next CEO. Braun's a longtime Coke employee who has worked in its North America and Latin America regions, as well as in global operations. He also spent years working closely with bottling partners and overseeing product strategy. He'll replace current CEO James Quincy, who is stepping down at the end of March. Finally, Gemini Space Station. Of course, this is the crypto firm headed up by the Winklevoss brothers. The company said its affiliate Gemini Titan has received approval from the U.S. Commodity Futures Trading Commission, the CFTC, to operate as a designated contract market. That allows it to offer regulated prediction markets to U.S. customers. Gemini said the new license will enable it to offer event contracts framed as simple yes or no questions tied to future outcomes. Well, shares of Nextdoor extending gains after a 25% rally in the prior trading session. The stock rose as much as 49% in Wednesday's trade after hedge fund manager Eric Jackson said the company was one of the most misunderstood platforms in the market. Jackson remembers the same investor who sparked interest and volatility in Opendoor after laying out his bull case. He's also best known for his bet on Carvana. And he's here with us. Eric Jackson, EMJ Capital founder and president, is with us now. Eric, it always catches my eye when you give a new pick, right? And not only mine, obviously a lot of other people who then bid up the stock. So I know we've talked before about sort of how you go about trying to find these picks. Talk to me first about how you kind of surface this one.
I'm always looking for these castaway public companies, where the market thinks it's X and it's really Y. And obviously that means that there's probably a substantial discount attached to the shares at the moment, which was the case with Nextdoor, which was the case with OpenDoor, which was the case with Carvana. And I think next you want to see a founder mentality within the companies. Obviously, professional managers can be great for banks and consumer goods companies, but there's something different about technology companies, especially ones that have been left at death's door. And there's something about the founders' attitude that helps them bring them back from the dead. At Nextdoor here, it's probably most known by people for the company that Sarah Fryer used to work for when they de-SPAC'd a couple of years ago. And now she was the CFO of Square. She became the CEO of Nextdoor. Then she left to become the CFO of OpenAI. But now they're, for the last 18 months, are headed by this guy, Nirav Tolia, who is a co-founder of the company. And he came back off the bench basically to kind of take the reins of Nextdoor again. He brings that founder mentality. And then probably the last really key thing I look for, Julie, is you want to see multiple S curves, for this company in various different businesses over time. Often I find Wall Street folks, they just focus in on, one single product. Think about Tesla, for example. Most people for the first few years after Tesla went public, they thought, what a stupid idea. Who's gonna, why would you ever want to build just a sports roadster company? And they just could not widen the aperture of the lens to think that actually they were building out all of these manufacturing facilities to build multiple, EV models and so forth. There's a second, third, and fourth act. And that's definitely the case here at Nextdoor.
Okay, so Eric, I didn't ask Wall Street about this one. As I was talking about you coming on this morning, unprompted, people said to me, Nextdoor is so annoying. I never signed up for it. And I'm getting all these emails in my inbox, and I don't know how to get off of them because I'm not signed up. And I think that's not an uncommon reaction that people have with Nextdoor. It's this ecosystem that you somehow get ensnared in, and there's no getting out. I mean, is that getting fixed under this new leadership?
Yes, it is. That was sort of a problem of Sarah Fryer's, basically. Nextdoor, one of its key strengths is that it's got 100 million verified real users. There is no spam. There are no robots on Nextdoor. And so that's part of, the core of the thesis here for why this deserves a dramatic re-rating, because do those verified real users count? Like I signed up for Nextdoor at some point. I haven't been on the thing in years. Do I count as a verified user because I have an account with it? Do the people who are getting emails who didn't sign up count as verified users? Yeah. If you signed up, you're a registered user. They only have 21 million, so approximately 20% of those verified users who are weekly active users. So I assume you're not one of those.
I am
Julie.
not.
and so that's part of the opportunity, is how do you re-engage people like you, the rest of the 80%. But to your point about the spam, I mean, definitely Sarah Fryer was trying to goose engagement, which obviously drives ad revenue as much as she could. And so what you found is that there was this over-emailing, over-notifications to users, which people got annoyed by. So under Nirav in the last 18 months, he's cut the number of notifications by 80%, by the way, with no effect on the user engagement. So it was 21 million people 18 months ago. It's 21 million weekly active users now, even without those spammy notifications. And then the other thing that Sarah did was that she widened the definition of what is your neighborhood. So if you lived in the Pacific Heights in San Francisco, she decided to say, hey, let's include the Mission, because we can show Julie some content from the Mission. But if you're in Pacific Heights, you don't that's not your neighborhood. You don't think about it that way. So Nirav again has sort of closed that into the neighborhoods that we know and trust. So the short answer to your question is yes. They have focused heavily on how do we raise our NPS, our Net Promoter Score, by making ourselves less spammy. And so that 18-month period has now come to an end. Now the time is where you can pull some levers to actually increase engagement and roll out some new AI-driven services that the market hasn't even seen yet and is not pricing into Nextdoor's price.
To your point, the active users haven't gone down, but they haven't gone up, right? So is there an inflection where we start to see that turn around? Does it need to for your thesis to work?
Yeah, absolutely. And I think they're on the verge of doing that. And so this is kind of like getting into Carvana at $3.50, not getting into it at $100. The move in the stock is going to precede kind of the levers that get pulled to drive that further engagement. And, again, what makes me so excited about Nextdoor is just how many levers they have available to them. I was listening to a podcast this morning with your boss, Julie, Jim Lanzone. He was talking to someone, and he made a point kind of reflecting on his 30 years in the tech industry that, people think about names like Webvan, Cosmo, and Pets.com as failed businesses. And yet, what do we have today? Instacart. We have Chewy, and we have like all the ideas were sound. They just weren't built for the right time. I think since time immemorial in the internet age, we have thought of, going after this local commerce opportunity as this gold mine. Tim Armstrong had Patch. There was Yelp. Right. There was, Facebook Local. There was, Microsoft tried to go after this area too. And yet they've all failed because they were all pre-AI. There is something now that's happening with AI and agentic AI specifically, where it is able to map onto this local opportunity with what Nextdoor has as this 100 million verified users, and they can start rolling out services that you, as this lapsed Nextdoor user, have never seen before. For example, instead of getting a spammy notification, you might get a notification that in your neighborhood, hey, 30% of your neighbors are using a plumber next week. He's coming to your area and we have spots open. Would you be interested in signing up for this, at a 30% discount because he's, since he's going to be in the area anyway, he's willing to provide that. Or, we have some notifications about, you've been searching on the Nextdoor app looking for a babysitter or looking for a dog walking service or something. And the AI can pick that up and start routing you these sort of lead gen opportunities. Think about like Angie and what people are used to with Angie. That was a $2 billion business a year from just basically lead gen a couple of years ago. That is totally open ground for Nextdoor to kind of start layering in. So that's what AI unlocks now.
Right. That's what it can do. We'll see when that happens and how big it is. Eric, we got to leave it here. I know there's lots more to talk about with you, so we'll do it again soon. And by the way, well played at quoting my CEO to me. Good to see you here this morning. Take care.
Time is right, Julie.
Yeah. Coming up on Yahoo Finance's opening bid, executive editor Brian Sozzi, who I frequently quote to people, is coming up. Oh. What's going on, Saz?
Thank you for always quoting me, Julie. I do the same thing too. I just don't tell you I'm doing it. But NVIDIA, I got a key guest that has profiled NVIDIA's CEO Jensen Huang. You've talked to Jensen, Julie. The person we have on the show is saying that Jensen has a temper. We all know Jensen as that cool guy with the black leather jacket. So temper, a little bit of a surprise there.
Well, driven people get things done. We know this. So
it's true.
So it'll be.
I have no temper, Julie. I'm very calm, always.
Well, we'll talk about that offline. Okay. Looking forward to the show, Saz. That does it for Morning Brief. Opening bid's next.